welcome to episode 5 of The Compass. Recording today on Thursday, August 29th. One of the slower days of the year, but a good time to reflect on what has happened this summer. In particular, we're going to do a callback to episode 1 where we talked about Q2 reporting and what we thought was going to happen there. As always, I'm Derek Macpherson, and joining me is Sam Pelaez, President, CIO, and CEO of Olive Resource Capital. So as I said, we're going to do a callback to episode 1 where we talked about Q2 reporting. And the key there was, there's 3 things we were looking for. A, we were looking for good results from most companies. We were looking for that to have, to see that deliver performance through those share prices relative to the gold price, because we noted that it had been lagging. And then obviously we were going to talk about whether when that was going to start to find its way down to the developers and the explorer part of it. First and foremost, Sam, you crunched the numbers for us. So why don't you tell us a little bit about what we saw in reporting from the large companies and some companies that we follow?
So to cut to the chase, the gold stocks have outperformed the commodity since we did that episode, which is what we were expecting. Prior to that, we were seeing a little bit of not underperformance, but not the performance that we expected. And the reason we argued that could be the catalyst is the Q2 reporting, which we expected to have in many cases record numbers. Those record numbers did materialize. In particular, most people who are in the space would have seen that Agnico Eagle put out record free cash flow, all-time high free cash flow. The stock is at its all-time high as we speak. And maybe let me share a little bit of a one-pager that we put together. So what we see here on this little diagram is the big 3. We call it Barrick, Newmont, and Agnico. We've added Anglo Ashanti because it's a stock we hold in our portfolio and one that we particularly like. But what you see on this chart is a comparison of the Q2 2023 operating cash flow versus the Q2 2024 operating cash flow. Naturally, the gold price has increased quite substantially over that period. And as you can see, in all cases, the operating cash flow increased materially. If you average the increase over these 4 companies, it's about 65%. So I call that very material, 65%. Naturally, we expect this to translate into the generalists getting attracted to the space. And perhaps that could lead to some of the re-rating we were expecting in the stocks.
And I guess, Sam, maybe back on that, why, I guess back to that lens of how generalists look at stocks. Like we've built a screen for sort of mid and large cap companies, resource companies in general, but you've built that screen primarily based on how generalists view those types of stocks. Maybe talk about some of the key factors that generalists are looking for, and that maybe if we saw those in some of this Q2 reporting.
Yeah, so the generalists look for 2 things in particular. One is profitability. The second one is growth. Growth is what leads to the multiple expansion. So, these gold companies have been profitable for the recent couple of years. The cash flow generation has been very strong. That's not new. I guess what's new in this particular episode in this particular period is the rate of growth, which means that investors are willing to pay particularly higher multiples for stocks in contrast or in comparison with other sectors. So typically what you hear people on the, in New York who are generalists, and what they're looking for is they'll pay up to 2x the growth on multiple. And that sounds a little bit convoluted, but effectively the company's growing at 15% a year in revenue or earnings, they're willing to tag at 30 times PE on the stock. So I haven't prepared those specific numbers for these stocks, but if you see the operating cash flow grow by 65%, what that means in broader terms is that investors are willing to pay higher multiples to own these stocks, which should lead to re-rating, considering that there is upside opportunity, which is the second part of this event, and we'll talk about that in a second.
The other thing you have to remember is that generalists will always be hesitant to jump into the gold sector. It's a small pool. It's a small pool of investable assets for typical generalist investors. And, it's not like gold companies have a history of being great stewards of capital. In fact, they're gold producers have been serial destroyers of capital. In particular, maybe with the exception on this chart of Agnico, if you look at Barrick and Newmont, while they are all bumping up their 52-week highs, they certainly are not at their all-time highs, even though the gold price is at an all-time high. But eventually it becomes too attractive. The profitability growth becomes too high, the revenue growth becomes too high, and all of a sudden you start to see that wave and that move. And I guess the next thing to talk about is, have we started to see that move? I think, Sam, when we spoke in episode 1, we talked about that we were about a third of the move we had seen. For how much the gold price had moved, the stocks had only moved about a third. Are we starting to close that? We're starting to close that gap?
The answer is absolutely yes. And so just for quick numbers, since our episode, which was roughly a month ago, the gold price has moved about 5%, just over 5%. The basket of stocks we're looking at this for, plus Dundee Precious Metals, which I haven't included here, but it's also another one that we'll look at. They've increased in value about 15%. That's a 3-to-1 move. Historically, what we see when there's these big moves, and we talked about it in that episode, is the gold stocks should at least double, the producers should at least double the performance of gold over that period. If we look at the not most recent low, but the big low of recent times in October 2022, gold prices have increased 50% since October 2022. On average, the stocks have roughly gone up. They've gone up more than 50%, so they've outperformed gold, but not to the tune of the 2-to-1. I estimate, based on the GDX, and roughly it's similar on this basket of stocks, although some have outperformed and some have underperformed each other. There's still about a 30% left to comply with that expectation from the past. So we could see another 30% move in the GDX to correlate with the existing move that we've seen in the gold price. And again, what we've seen since episode 1 is a 3-to-1 outperformance. So the catch-up is happening as we speak.
Yeah, I think that's a good point. And I think, there's that move is kind of as anticipated, but also we're seeing it, we're seeing it into, August is typically, you'll correct me if I'm wrong here, but August is typically seasonally strong and September is typically seasonally weak, right? For gold stocks and gold performance. And so it's interesting that you still have a sort of that 30% left to go going into what is typically a seasonally weak period for gold.
Yeah, so the joke has always been that the September conference is a good time to sell, not to buy. The period between September and the end of November typically is the weakest seasonal period for gold, not necessarily gold equities, but for the gold price. Then December and Q1 of the following year is typically the best period. So what we may see here, and it doesn't happen every year, but what we may see here is a cooling off, a consolidation period for gold between now and the end of the year. And then we could see a reacceleration after December and into Q1. So we may need to wait until then to see that 30% outperformance to catch up. But I guess the good news and the opportunity here is that there is still opportunity to make money on these large caps,
right? And there's still but not as much as there was, right? We were with 30% left, and so then it goes. The natural progression is, well, when does this move go from the large caps of the Agnicos and the Barricks and the Newmonts and the Anglo Ashantis, and when does it get down to those junior producers, and then, which there aren't a lot of left, anyways, and then more specifically for our portfolio, down to the developers and explorers. And I think my view, and it isn't, we haven't seen a big move in a lot of developers and explorers, but a couple things that are sort of have been really good signs. We're starting to see financings down in the development explorer space. How about in August, which is from my time as an investment banker and working on the sell side, that's very atypical. You typically don't see those kind of things at this time of year. Second thing is, I think the stocks have been performing better. I don't know, Sam, you watch the markets a little bit closer than I do. What do you see in from a performance perspective?
We particularly like the small producers in that space. We like it quite a bit. We've actually seen pretty good performance already in that space. Whether you talk about London Gold, Dundee Precious Metals, which is a little bit more senior in that sense, but still in the mid tiers. Even IAM Gold, we have seen pretty solid performance on the producer side. That has not translated yet into the developers. Typically, you have the waterfall where you have the majors performing first, then you get the push from the intermediates, then you get to the very small producers, then you get to the developers. Right now, it seems like the waterfall has stopped with the producers of any scale, really. They have all performed quite well, but it hasn't really spilled over into the developers. There lies another complete set of opportunity, which we discussed in that first episode as well.
But I think you're going to have a couple things with developers and explorers, right? I think that there's historically, if you look back at, say you look at the bull market from 2001 to 2006, and you look at how things played out, yes, developers and explorers significantly outperformed over that period. But the first 6 months of the run, it was actually the producers that performed. And then eventually the developers and producers caught up and then accelerated past. And so I think part of that's usually M&A. And the other part of that is capital. And we've been in, it hasn't been a desert for years. It's been a bit of there has not been a lot of capital around for developers and explorers for, let's call it 18 months. And I think that you're going to have to get through a capital raising cycle before you really get that significant outperformance, right? As you look back, it's the funded companies that really do well, the ones that have money to deploy and generate catalysts, and which inevitably sometimes makes funding a catalyst in itself for those companies.
I mean, I was quick to say that the water has stopped there, but obviously I just reminded myself of the Cisco takeout 2 weeks ago. I'm reminding myself of Southern Cross in Australia, which we own, and how well that's doing. Obviously, they're not so much of a developer still. They're still in the exploration phase, but the stock continues to perform exceptionally well. And whereas the Philo takeout is more of a copper directed event, we were talking about how that money is going to recycle back into the juniors, and some of that is naturally going to end up in the golds.
Yeah, I think that's the other. That's a good point. We're going to see capital sort of recycle it, and to your point, I think we talked about this on the Philo takeout or in the M&A episode, is that most of the active fund managers have cycled their capital out already, right? On the Cisco one as an example, right? That's basically been handed to the arbitrage funds, and the active resource fund managers are already out.
Correct. Yeah.
And so I think that those are certainly, that bodes well because Cisco was a developer, right? So those same investors are looking for new places to deploy capital, and most mutual funds can't sit on cash or have limits sitting on cash. And maybe there's a favoritism to gold or whatever. The other thing I would point out is there have been a couple of larger financings recently, which again, this time of year, not pretty atypical. So I think there hasn't been a ton of share price performance in the developer and explorer space, I definitely think that there's momentum there. I don't know if that makes sense. It feels right. Stronger than it has been. So
I mean, we every month we put out our NAV, and we each write a quote that we try to summarize what we think is going on, and putting that in a single quote is actually very hard. But if you summarize what we've been saying, or at least what I've been saying on my quote for the last couple of months, is there's been small corrections and consolidation periods in different commodities, but the trend, the uptrend, is still intact, and it feels like it's set to continue. Again, gold may consolidate here until year end. It may keep back $150. I don't know, but it does feel like we've caught that move. And even though right now the trickling is only, the Cisco takeout, the Filo takeout, a little bit of capital raising here and there, it does feel like we're moving in the right direction, and the capital flows are moving in that direction. Just a matter of time as to how soon and how big the avalanche comes,
Yeah,
right?
I think that's a good point. I think we have to remember that it is August 28th or 29th. The first step to record this episode. Not a lot of news. There's not a lot of people are sitting at their desks. Most people, most investors and most companies are, quiet. And so typically what you get on the Tuesday of Labor Day, which I think we'll get again this year, is you get an avalanche of news. And that first week of September, that first week of September, we'll probably get some financings announced. You have to remember that and we're going to get a lot of news next week because it's the week before. It's a short week, but also it's the week before the Beaver Creek Precious Metals Conference at Beaver Creek, which a lot of juniors go to. A lot of juniors and developers, that's folks that show, so you get a lot of news flow there. Again, the following week, the 9th, let's include that in next week, right? Because that's the day before the show, and there'll be a lot of news then as well. You're going to get news flow then. For that, and then we'll probably get a lot of news flow if there's any big M&A to happen. Probably get it that week, or because then the following week we get the start of the Denver Gold Forum, and so I think that there's which is the sort of the large cap conference, and so I think that there's we're kind of at a point where there's going to be a lot of news flow for gold companies coming up, and news flow into a strong gold price environment where there appears to be more interest in gold stocks, should bode well. History's repeat. We're going to get lots of companies hold their news don't put out news the last 2 weeks of August. What they can hold, they hold. So
yeah, the obvious reason why you hold your news to the conference is that you get an opportunity to discuss the news, and if it's an acquisition or merger, you get the opportunity to meet with all of your big shareholders and explain to them the reasoning on a one-to-one basis. So there is obviously this kind of bubbling of the news around these events. Even the very famous Randgold no premium takeover of Barrick, people call it a Barrick takeover, but it was really a Randgold takeover of Barrick, was announced just before the start of the Denver Gold Show. God, I don't remember how many years ago. But that same day, they held a big luncheon at the Broadmoor to meet with investors and explain the rationale for the merger. So we may see some of that. We'll certainly see all sorts of news. We'll certainly see the kind of summer drilling results from a lot of companies heading into this period, and obviously, the way the junior cycle works is you've exhausted your summer money, and now you need to come back to the market. So you'll need a new shiny presentation and some news flow. So over the next 2 weeks, it's waking up early to catch up with the avalanche of news.
And I guess maybe we'll do this in a little more detail in the next episode. Talk about what we're seeing over the next, what we're looking for specifically at the conferences. But I guess other than sort of news over the next few weeks, is there anything else that I guess investors should be watching out for? We talked about the seasonally weak period for gold. Is there anything else that jumps out at you that worth mentioning?
The September meeting for the Fed is always one of the key ones. It's typically telegraphed well out of Jackson Hole. That seems to be the case this year, but there is always volatility around it. It always happens, I think, the last day of the Denver Gold Show. It always sort of coincides. There is always volatility in the US dollar pricing, the DXY, and that translates into volatility for commodities. So we have to live with that as well during the conference and over the next couple of weeks. that's the major, let's call it a macro element. And like Derek said, maybe next week we'll do a pre-conference show. We'll share with you the companies we're looking forward to catching up with, and why, and what our expectations are for the shows. And we'll try to make another episode while we're at the show, and kind of share updates and highlights of what we've seen, and the important news that have come out, etc.
Yeah, I think that's a good idea. Back to that FOMC meeting, it is going to be the last day of the show. It's going to be on I guess the well telegraphed thing is that 25 basis point cut. So let's see what comes of that. And it is a volatility going into that, and lots of news flow as well. So it should be an interesting next few weeks here for both the gold space, but also the resource space in general, because there will be a lot of news flow. And we look forward to speaking to you next week. As always, if you like what we had to say or didn't like what we had to say, please give us your feedback and why. And we'll keep making these until you tell us to stop. Thanks.